A chilly start to the week, but it'll soon hot up with earnings from Barclays and Commerzbank, just to name a few. Here's what you need to know before the headlines. The reputation of Europe's biggest banks has been battered by scandals, fines and cost cuts. The bad news has been coming thick and fast, and it's likely to continue.
One thing you're going to see in the fourth quarter is that European banks may have struggled in fixed income trading and sales. The Wall Street banks didn't do so well in the fourth quarter compared to the previous quarter, and in Europe the conditions have been even tougher.
StarMine shows that only Barclays, out of all the banks reporting, has a small probability of surprising on the upside. But rather than earnings, what investors will be looking out for will be what new Chief Executive Anthony Jenkins says about its new strategy this Tuesday.
I think when Jenkins stepped in, he was pretty proactive in coming out with a lot of bad news, effectively cleaning out all the skeletons from the diamond cupboard. With this lower level of expectations, I think both he and Barclays will be hoping to be well placed to impress the markets in the coming reporting session.
But Barclays isn't faring as well compared to its rivals when it comes to return on equity. Its ROE is the lowest compared to ING, Commerzbank, BNP Paribas and Societe Generale.
Return on equity is key, so is net interest margin, but most of all I would look at pre-tax underlying profit, because that's really how much banks are making, and there's going to be a lot of noise, there are going to be a lot of restructuring costs, particularly for the likes of Societe Generale and also Crédit Agricole, so you've got to take that out first before you really know what you're getting.
So here are the key points to take with you. Barclays may report profits of £7 billion for the full year, outshining its European rivals. But the key events in this stormy and chilly week will be what Anthony Jenkins says about the company's future strategy over there. Angeline Ong for Reuters.